Ignition sequence start. 6, 5, 4, 3, 2, 1, 0. All engine running. Liftoff. We have a liftoff.
Welcome to the Journal of Space Commerce podcast. I'm Tom Patton. AE Industrial Partners is a private investment firm focused on technologies and services considered critical to aerospace and national and economic security. Founded in 1998 by father and son team Brian and David Rowe, AEI manages $7.2 billion in assets from their headquarters in Boca Raton, Florida. My guest on this edition of the Journal of Space Commerce podcast is Kirk Konert, a managing partner at AE Industrial Partners. And Kirk, welcome to the podcast.
Thanks, Tom. Appreciate the time and excited for the conversation.
I'm excited about this too because you've made news this week, and that's a rarity for me on a podcast. But you made some news this week by acquiring L3 Harris and going to remake that back into Rocketdyne. Tell me about this this development and what led to making that an attractive acquisition target.
Well, we timed the announcement for this podcast, so it worked out well. I
should be so lucky.
Exactly. No, we're excited to announce it this week. Coming out of the new year in 2026, hit the ground running. Really excited to be part of this historic acquisition, in our view, of bringing back the Rocketdyne heritage name and reinvigorating that company from its glory days. It's been part of every lunar mission since the U.S. started going to the moon and bringing humans to the moon and coming back to the moon this year. We're really excited to be part of that in partnership with NASA and national security programs. And I think it's a really interesting model as we think about what's happened with consolidation of all the aerospace and space companies over the last few decades. And now what we're seeing is more of a deconsolidation and new entrants being introduced into the market. This is part of that theme in a new way, which where L3, a prime, has been part of that consolidation over the last couple of decades, is now partnering with a specialized investor like AE Industrial to reinvigorate and stand alone a new platform in Rocketdyne, which includes some, like I said, some of the key workhorses of propulsion for our space and national security programs here in the U.S. So really excited about that announcement, getting that closed later this year, and being part of what we think is a marquee transaction in this market.
What makes this different from a SPAC? We heard a lot about SPACs kind of back before the pandemic, and how is this? Is it similar in some ways, and how is it different?
Yeah, SPACs are a vehicle for companies to access the public markets. This is different in terms of we're actually carving out a division of a company that is public, L3, and making a standalone company as a private company. So very different ways of how you capitalize businesses. We are actually taking a business out of a public company, capitalizing it at a private perspective, and then operating that business in the private markets.
Let's go back to the company founding for just a minute, because Brian and David Rowe, Brian came out of the GE Aviation engine realm, and what then led the company into investments in space?
Yeah, propulsion is in the heritage of AE Industrial. Brian and David Rowe, his son, co-founders of AE Industrial. Brian passed away several years ago. David Rowe is still co-CEO of our firm. But Brian was a pioneer of jet engines and propulsion. So propulsion is in the blood of AE, if you will. This is when you think about space, getting into space requires space propulsion. And then you have in-space propulsion to move things around when you're in space. So we love things that fly. We love things that make things fly. Propulsion is core to what we do and what we know. That's where our heritage is, where we have technical capabilities, where we have history across all of our partners of operating and scaling businesses in propulsion. Rocketdyne is a perfect fit for what we do. Space is a perfect fit for what we do. And we're really excited to be, we think, a market leader in investing in the space market. If you look at our portfolio, we've spanned across the various parts of the space market. We can get into later in this conversation, but really, if you think about aerospace, that encompasses, in our view, space. It's not just air, but it's also out of the Earth's atmosphere.
Well, let's talk about that portfolio for just a minute, because as you mentioned, it's a pretty broad-based space portfolio. So what are some of those companies in which you've made investments?
Yes, we've been the most active private investment firm in space over the last several years. We believe space is and has been at an inflection point of industrialization, where it's become a key part of our economy and infrastructure for driving our economy globally. And without space as a backbone of that infrastructure, our modern day economy sort of collapses at this point. So we've been really excited about investing in space, and we've made some really we think marquee transactions in the space market from a private equity standpoint. Our first foray into the space market was Redwire Space. Redwire was something we created from a white sheet of paper. We said, space is changing. It was going from, hey, we need to make one satellite every year to we need to make hundreds of satellites every month. That's a big shift dramatically for
Right.
the supply chain. We felt like we needed to create a business to take advantage of that, be the picks and shovels, inject capital into the supply chain to be able to ramp with that industrialization that's occurring in the space supply chain market. So we ended up going to a lot of family-owned businesses who had been operating in the space market for decades, providing technology that had flight heritage, that was driving missions into space, but had not been set up to scale with going from that 1 to 100 satellites. So we were able to create Redwire Space to go buy these companies, provide those tools and those resources to go help them scale and create a Redwire. That culminated into taking that company public back in 2021. It's been acquisitive since, now trades in the public markets. We're still a significant owner of that company today. Another one of those companies is we expanded our reach into the space market. We looked at different areas. Where are the critical choke points within the space supply chain where we should be investing in as a country, we should be investing in as a firm. The demand drivers are going to outpace the supply availability. We can take advantage of that compounding dynamic. So we looked at even further down the supply chain. We're in the chemical space. We invested in two companies. One, Ampac, American Pacific. Another one is Kelka Solutions. American Pacific makes ammonium perchlorate, which is a key chemical for solid rocket motors. That's a propulsion for space and defense applications. They go in the SLS, the solid rocket motors for the SLS, driving us back to the moon. And then Kelka makes hydrazine. They're the only manufacturer of hydrazine in the U.S. Hydrazine is a key propellant for satellite propulsion. So we invested in those two companies, both very successful. We doubled, tripled production capacity for those companies and ended up selling those to a public company. But those are great case studies of how we think about the market. And then two other ones I'll mention. One is another public company, Firefly Aerospace. Firefly went public in August, was also the first company to land on the moon in history successfully back in March, which we're really proud of as a firm in supporting Firefly. And then its public offering was the largest space IPO of all time. SpaceX is definitely will eclipse this year, but we were the first to be able to claim that. But we're really excited about Firefly and where they're going. They have a small launch business with their Alpha product alongside of their Blue Ghost lander that landed on the moon, and then we're developing a larger rocket with Northrop Grumman. And then the final company I'll mention is York Space Systems. York Space also publicly filed for an IPO. I can't say much more than that, but what I can say about York is they are one of the largest providers of satellites to the U.S. government. They are a game-changing company in terms of delivering small satellites into low Earth orbit for the U.S. government. That's a company we partnered with the founder, which is a common theme within AE and what we do. We like to partner with founders and help them scale their businesses.
So then how do you evaluate those companies that you target for, excuse me, target for an investment? What do you look for when you're thinking about making an investment in a company?
Yeah, we want to invest in market-leading companies that are, like I said, critical toll gates where if you want to bring a product to market, or you want to get a mission done, you have to go through this company. You have to you require their service or the product to actually make that mission happen. Those are the types of companies we invest in. We like to invest in the best management companies and founders in the world, management teams and companies founders in the world. Those are the teams we like to back, where they need help scaling business. They've found product market fit. They have a customer, they have a backlog, they need help scaling their business. That's where we think, unique capabilities to help them scale their operations, scale their BD functions, make them best in class in their government relations. Those are where their special sauce plus AE's value add. That's when we can make a lot of money and make together and make companies great.
One more kind of in this procedural section of the program, how hands-on are you overall with some of the companies you invest in? Because most people's view of investment is Shark Tank. And the Shark Tank guys and women will make an investment, and then they'll talk about how they're going to help and what they're going to do for the proprietor and the owners of the company. When you get to your level at AE Industrial, how hands-on are you as you move through the process?
Yeah, we like to say we're value-added investors. We're not the investors who are just going to give you a pile of money and then call us back in 5 years, tell us how you did, right? That's not our model. Our model is
you'd lose money doing that.
Yeah. Our model is you're picking AE Industrial because we're the right partner for you, right? You believe that we can help you make your company better, and so that means there's a relationship and a partnership with the management team and the company to go align from a strategic perspective and then help them grow. And those are in ways, like I said, like helping them expand manufacturing, expand their ability to sell across different customers, whatever it may be. Those are where we get involved. So it's a very much a partnership model where can we value add? But we're not running companies. My job is not to run companies. I don't want to run companies. The CEOs run the companies. We help be the fuel for their great ideas and help drive their strategic vision.
And you're also not trying to make entertaining television.
Definitely not.
But Kirk, some of the companies in your portfolio are pretty government dependent. So how do you mitigate the risks associated with fluid budgets and shifting political winds?
Yeah, we'd like to focus on areas where there's bipartisan support, if that still exists these days. But in areas where there's not dramatic viewpoints across the aisle, right? Where like space tends to be an area where people on both sides of the aisle have bipartisan support for. They might have different focus areas within space, but space, I think, generally is an area where both parties believe we need to invest as a country into for a national security perspective and exploration perspective. So we try to find areas where we're not going to get whipsawed by Washington every 2 to 4 years. So that's one. Two, we do have we like to invest in companies that have the ability to sell in different markets, different customers. So if you can sell for Firefly, the rockets can be used to launch a government satellite. They can be used to launch a commercial satellite. They can be used to launch a NASA satellite. They could be used to launch an international customer satellite. So
Sure.
They have the dual use ability to sell their technology. So that's how we mitigate some of that. But we are definitely we're never going to shy away from what we think is a critical part of our market and space, which is government buyers, right? Government is still the largest buyer of space infrastructure globally, and so we're going to continue to support that customer, and develop technology for that customer.
Can you give us any examples of maybe some cross-portfolio value creation in the space realm? Do some of these companies work together? That's all part of the whole supply chain thing.
Yeah. So great example of that is Firefly, the Blue Ghost lander. They had cameras from Redwire. So Redwire
Sure.
Space provides all the cameras for Blue Ghost, and most of the cameras you see in space and all these missions like Orion, the cameras are from Redwire. But that's a great example of two portfolio companies working together to complete a mission and fly that. But there's several of those case studies. Our job is not to force those things to happen. It happens organically. The companies work together
Mhm.
we're investing in great companies, so great companies like to work with other great companies, and we can help facilitate that. But we're not ones to force synergies between the portfolio companies. They operate standalone. They do their own thing. But they have the ability, obviously, to collaborate with our other portfolio company CEOs and leadership teams.
I'm Tom Patton, and I'm talking with Kirk Konert, managing partner of AE Industrial Partners on the Journal of Space Commerce podcast. We'll continue the conversation in just a moment, so please stay with us.
You're listening to the Journal of Space Commerce podcast from Xterra Media. The Journal of Space Commerce is the only industry publication to offer in-depth coverage of the entire space commerce value chain, from the supply chain to satellite operations and terrestrial applications. If you're a decision maker or investor in the space commerce industry, or an executive who needs to know how space commerce touches your business, please consider becoming a paid subscriber. Of course, everyone is welcome. Your paid subscription will give you first access to premium articles and podcasts focused on the space value chain. From market analyses to regulatory developments and company spotlights, paid subscribers will find valuable data to help you make informed decisions. Just visit www.xterrajsc.com on Substack and help keep the Journal of Space Commerce the industry's only independent source for space commerce intelligence for business leaders.
Welcome back to the Journal of Space Commerce podcast. I'm Tom Patton, and I'm talking with Kirk Konert of AE Industrial Partners. Kirk, you've been aggressive. Your company has been aggressive the last couple of years with the Celestial Series A, Air Transport Components acquisition, $418 million in leasing fund close, and now, of course, the Rocketdyne acquisition. Is all of that likely to continue here in 26, and what is driving that deployment tempo?
Yeah, we'll continue to be active in the sectors that we love. We love national security, aerospace, industrial services. Obviously, this is space focus. Like I said earlier, we are a leader in space investing. We'll continue to find opportunities. We do have a venture fund that will look for opportunities in space and national security. That's actually in partnership with the U.S. government, with the Office of Strategic Capital. We're going to continue to be extremely aggressive how we think about capital deployment and where to invest. We think this is, in space specifically, a once in a generation opportunity to invest capital. We believe space will continue to take a large market share of opportunity from a GDP perspective. It's going to be a faster growing industry. You can see what's happening with the SpaceX IPO and the interest from investors. We think that's a really strong signal for the market overall. So we're really excited about the opportunities we see, where we tend to be, like I said, disciplined about where we invest. We know what's a good AE deal, what's the right situation for us, who's the right partners. We focus on those areas, but we see plenty of those opportunities out there.
Are you seeing valuation compression in space, enabling better entry points? And we talked about SPACs, and that kind of all went away. So in this kind of post-SPAC era, are you seeing some valuation compression in space?
So what we saw, you saw the run up in 2021 with this. Well, you couldn't spell space without SPAC. That was the famous phrase. And then you saw the general market when interest rates started to rise. The perceived high growth, high risk companies, space included, for some of their SPAC names, struggled in that environment where they couldn't raise capital, prices decline, valuations decline. So you saw what I thought was actually a healthy symptom of that, which was the strong space companies survived, got stronger. The companies that probably had great ideas, great technologies, but didn't have business model that was enduring, those technologies got absorbed by other companies that were stronger. And then out of that, you saw a process of the strong companies coming out of that sort of malaise and valuation to a point now where we saw pretty much recovery in 2025 and beyond recovery to those pre-2021 days, where there's been a extreme interest from investors and institutional investors to invest in the space and defense tech market. And we've seen the IPOs. Obviously, Firefly was an IPO, Voyager Technologies, Karman Space. We now the SpaceX IPO. Obviously, York, the filing of that IPO, where you're seeing now a new generation of these companies that were stronger out of that sort of 2021 process now be able to exit into the public markets. And so there was a valuation reset. I think that's come back to a point where we're back to those levels in pre-2021. For us, when we're looking to invest capital, like I said, we're trying to find the opportunities with founders and families who want to invest alongside of us. We partner, make the company better, and then they're worth more. And they make even more money in the second bite of the apple. So that's how we see the market today.
But as you've mentioned, not everybody's going to make it. And some of the big names have struggled. Most kind of prominently, Virgin Galactic comes to mind as a company that, had Richard Branson's backing and is not really doing nearly as well as everyone thought they were going to. So how are you thinking about exits for companies like Firefly and York and Redwire and GE Aerospace? Are there strategic buyers realistic, or is this kind of a hold for cash flow strategy?
Yeah, I would say Virgin Galactic was focused on the tourism market, space tourism market. That's not an area where we've focused on. It's someday that might make sense, and Virgin Galactic might be the right player at the time. That time, for us, we're focused on companies that can deliver into a market that's needed today, and it's established market. Our venture portfolio does a little bit different. They look for further out, but and what I'm focused on, and the types of deals I'm focused on, I'm looking for companies that have a customer today, have a product that works, and they just need help scaling that technology.
What about companies that may feel the need to pivot or maybe diversify their business lines?
Yeah, those are interesting opportunities where they might have a technology that's or a brand that's really interesting, but the market isn't as great, or it's diminishing faster than expected, and they need to pivot through acquisition or new technology development. Those are areas where we will get involved in as well. But in terms of exits, Firefly is obviously public. I think we've been able to establish the ability to do that. Redwire obviously is public. So I think what we're seeing based on that theme is like the opportunity. The public markets are open for space and defense tech companies. I do think you saw CACI actually buy another public company, buy Arca, which was owned by Blackstone, in a pretty large transaction of $2.5 billion-ish. So I do think you're going to see both the public markets and strategic buyers look to get more space exposure.
How do you position some of your portfolio companies too? And I have written here compete, and I don't know that anybody competes with SpaceX right now, although there are some companies that are trying. But then there's collaboration with SpaceX. They're obviously the big dog kind of in this sector right now. Is there a risk of being squeezed out if they can't work with a company like SpaceX?
SpaceX changed the game for space, right? The reusable rocket Falcon 9 changed the game. Starship, I think they're trying to change the game again. We'll see. But I think we wouldn't be able to invest in space in this way if it weren't for SpaceX. So all credit to that. I think as we think about opportunities that come out of that. Right? Are we going to create our own Starlink to go after the commercial market? Probably not. We're going to let others do that. We're going to try AST Mobile try that. Other companies try that. But we'll provide the technology or the services to go help competitors, try to compete with SpaceX.
Mhm.
Like SpaceX monopoly is not healthy for anybody, right? It's not
Right.
healthy for the U.S. government. Depends on it. It's not healthy for the consumer. We need competition. That's what we're built on in the U.S. We think that's the best thing. SpaceX again has a basically almost a monopoly in launch right now. That's not great, right? So like for Firefly, we are obviously a launch company. We're focused on an area of the market where we think we have a differentiation and a cost point that makes sense for the customer that doesn't necessarily go compete head to head with SpaceX, but obviously provides launch services. So where we're trying to find opportunities is where we can carve out niches within the market, and then we can be the go-to market leader in that particular area, whether that's with York when the satellite side, whether that's Firefly and the launch and landing side. And then Redwire is an ability to provide all the different parts and services and components and technologies that everyone needs for their missions, including SpaceX.
Yeah, SpaceX obviously has pretty much a de facto monopoly on human-rated space launch after the issue that they had with Roscosmos and the Soyuz vehicle. So
Yep.
that's going to be an interesting development to watch to see if anybody comes along with any of these other rockets that are in development to see if they can get them up to human-rated. I know that Blue Origin has an opportunity to do that, but I think they're a long way with New Glenn from being a human-rated spacecraft.
I mean, people tend to forget that. Yeah, once SpaceX almost failed a few times, but
Sure.
after they had one real success, the U.S. government gave them NASA gave them a contract to do human-rated launch. Of course, they went and executed and delivered when nobody else could. But the U.S. government's going to have to step if they were serious about providing competition to SpaceX. They're going to have to do the same thing. That's what helped SpaceX get going, get funding. Obviously, Elon Musk is a special person, but my view is that the U.S. government was just as important as Elon Musk was to set up SpaceX.
We could have an entire different podcast on that topic, Kirk, and maybe we'll
Yep.
do that one day.
Okay.
We've got a couple of more questions for you here, though, because space is traditionally a long-term kind of investment. And you've been developing companies that are working on technology for lunar and LEO missions. So what are the technology risks that keep you up at night?
Space is not for the faint of heart.
Space is hard,
Yeah, yeah,
someone
yeah.
once said.
I think there's not necessarily like we work with some amazing people and some of the smartest people in the world across our portfolio companies. There's always the moment when you're about to land on the moon, like what is it gonna make it? Or when we're launching, is everything gonna go smoothly and we're gonna have 100% success? Like those are restless nights ahead of a launch or a landing, right? But in terms of like, the teams and what we have in the U.S. in terms of our talent and like the reinvigoration of people wanting to work in this industry, I've never been more optimistic of what we can achieve as a country and as an industry, and no technology that we cannot ultimately solve. But I'd be lying if I didn't say like there are the day before a launch or the night before a launch, and
Right.
those are hard nights.
Along those lines, how do you help your portfolio companies recruit and retain that talent? Is there a culture playbook that you bring from the aerospace sector, and where do you kind of fall in that?
We want to be known at every one of our portfolio companies, and we push this across the board. Like it starts with how we think about ourselves at AE. We want to be known as the acquirer of choice, right? We want to be known as we're not just a investor, New York private equity firm, right? We're
Mhm.
a strategic investor. We know your industry. We love this industry. Have passion for what you do. We want to be partners with you. That flows down to our companies where we're partner when they're we believe it's our responsibility to build these companies. We're inspiring people. We're employing, our portfolio companies are employing people that we're relying on to feed their families. Like, this is important stuff. It's important stuff to us when we're making decisions around where do we go strategically. So when we think about our portfolio companies, we want them to be known as the employer of choice within their respective markets. If you're in Austin, Texas, you want to go work for Firefly. If you're in Denver, Colorado, you want to work for York Space Systems. That's important to us because we want the best people to want to work for our companies because we're doing amazing things. We're a great place to work. But I think it really starts with focus on what our mission is, how we inspire people, and do they have passion for what we do. That's when the magic happens.
And finally, Kirk, where do you see your space portfolio, or what would you like to see in your space portfolio in the next 3 to 5 years?
Continue the same, but more. Right? We're really excited about what we have. We obviously mentioned most of them on this podcast, but we're going to be really active across the space domain. We want to, obviously, with Firefly, we want to see more landings on the moon, more launches. York Space, we want to create more opportunities to build satellites and build hundreds of satellites a year. Redwire Space, continue to provide technology to all the missions, including some really important ones coming up with Artemis and with Gateway. So we're excited to just keep going. We've never been more excited for where we are today.
Well, best of luck to you, and I hope you'll come back and join us again on another podcast in the future.
Would love to do it. Thanks, Tom.
Kirk Konert is a managing partner for AE Industrial Partners. And that's going to do it for this edition of the Journal of Space Commerce podcast. I'm Tom Patton. Thanks for joining us.
The Journal of Space Commerce podcast is a production of Xterra Media. The executive producers are Mike Turner and Tom Patton, with production assistance from Debbie Turner. Check out our YouTube channel and be sure to click on subscribe so you can stay up to date on developments in space commerce and be notified when we post new videos. The Journal of Space Commerce is the only industry publication systematically covering the entire space commerce value chain, from the supply chain to satellite operations and terrestrial applications. If you're a decision maker or investor in the space commerce industry, or an executive who needs to know how space commerce touches your business, please consider becoming a paid subscriber. Of course, everyone is welcome. Your paid subscription will give you first access to premium articles and podcasts focused on the space value chain. From market analyses to regulatory developments and company spotlights, paid subscribers will find valuable data to help you make informed decisions. Just visit www.xterrajsc.com on Substack and help keep the Journal of Space Commerce the industry's only independent source for space commerce intelligence for business leaders.